Okay, let's dive into the long-term investing 2.0 module. Choosing a company to invest in for the long term. How do you do this? Well, there are a number of things you have to consider before doing so. So let's just say, for example, there's a company and you see them on television all the time. They have the best and most funny commercials you've ever seen. Also, this company, they've just opened up a few stores in the city that you live in. And lastly, this company has just hired your favorite celebrity to endorse their brand. So it would seem like this company has it going on, right? And maybe, and just maybe, you now want to invest in this company. But there's one question you have to ask yourself. Are they actually profitable? You can see them doing all of these wonderful things, but it doesn't mean that they're profitable. They could be drowning in debt. Even though all of that stuff is going on, they still could be in debt. So how do we find out if they're profitable or if they're in debt? Well, I'm going to show you in this module. So let's go into a quick video and I'll be right back afterwards. All right, so when I'm thinking about investing in a company for the long term, one of the first things that I do is I come right here to Yahoo Finance. You come here and you're going to go to the top and type in the ticker symbol for the company that you're interested in. In this case, we're going to use Netflix because I'm sure that we're all spending money with Netflix. I know that I am. All right, so we're here. We're going to come straight to financials. And on this page, there's three things that I want to see. First is going to be this income statement, which is right here. Number two is going to be the balance sheet, which is what we have right here. And then number three is going to be the cash flow statement. All right, so now as you can see, there's a lot of different things on each document. But what I'm going to do is I'm going to highlight the things that you can focus on, or the key things that you can look at to determine whether or not you want to invest in a company for the long term. All right, the balance sheet. Let's get into it. So first up, we have current assets. These are assets that can be easily converted into cash. This includes cash and cash equivalents, accounts receivable, and inventory. This number should be growing year over year. Next up, we have non-current assets. These are assets that are not easily turned into cash. So this could be machinery, computers, buildings, land, patents, or copyrights. Then we have current liabilities. Liabilities that will be due after a period of at least 1 year from the date of the balance sheet. Now, this number can be increasing. So the current liabilities number can be increasing. However, the current assets number, those numbers have to be increasing as well in this situation. If not, it is a concern. Then we have non-current liabilities, liabilities that will be due within 1 year. And lastly, common stock equity, the remaining assets available to shareholders after all of the liabilities have been paid. These are the funds retained within a business. This number should be positive and also growing year over year. Let's use Netflix for an example on the balance sheet. So on the right over here, we have some numbers. We have 2020 right here, 12/31/2020, 12/31/2021, and 12/31/2022. So we want to see these numbers increasing year over year, and that is happening. Now, it says here, all numbers are in thousands. So this wouldn't be 39 million or 44 million or 48 million. This would be in billions, all right? Million, thousands, so it's billions, this number, these numbers. So let's look on the left here. We have total current liabilities plus total non-current liabilities. All right, Here we have these two numbers right here in yellow highlighted. When we add these together, we get total liabilities right here. That's this number here in the red. Next, we have total assets minus total liabilities. So that's this number here in the green and this number here in the red. Now that gives us our common stock equity number right here in purple. Then we have total assets divided by total liabilities. That's these two numbers right here. We get 1.75. Now, if a company is financially stable, this number should be 1 or higher when we divide the total assets by the total liabilities. We want to see 1 or higher. Okay? The income statement. Gross profit. The profit after subtracting the costs associated with making and selling its products or services. Cost of revenue, the cost of producing a company's goods or services. Total revenue, the money a company makes from selling its goods or services. This number should be positive and increasing year over year. Operating income shows the operating performance minus the interest and taxes. This should be a positive number. All right, Netflix again. The income statement. Let's take a look. So here we have total revenue minus cost of revenue divided by total revenue times 100. So here is the breakdown. So we have total revenue here in the green. We have total revenue here in the green over here. So we take this number and we subtract the cost of revenue and it equals our gross profit. We take our gross profit number divided by the total revenue number and we get 0.39. We take 0.39 and multiply it times 100. That is going to give us our gross profit margin percentage. And of course we want to see that as high as we can get it. All right. And we have here operating income divided by total revenue times 100. So in the yellow, operating income right here. Total revenue in the green right here. All right. And once we divide those numbers, we get 0.18. We multiply that times 100 and we get 18% on the operating margin. So with that number, we want to see 15% or higher. All right. Moving along to the cash flow statement. Cash flow from operating activities should be increasing over the years and should be a positive number. Then we have cash flow from investing activities. This number is expected to be negative since it comes from the company investing into long-term assets. So that could be buying land, selling equipment, or other assets. Then we have cash flow from financing activities. This also is expected to be negative because it comes from issuing stock, bonds, or loans. But these activities can bring money into the company. Then we have free cash flow, a company's emergency fund or what they would have to rely on during the hard times. So this number we want to be positive and increasing year over year. Cash flow statement right here. So we see, if we start over here, this number is increasing. So we have 2 billion. Then if we go to the left here, now we had a drop off here in 2021, but in 2022, it returned back to 2 billion and now 6 billion. So for Netflix, the numbers are increasing year over year. Now let's look at this line here. Cash flow from the investing activities. The number is negative. And like we said previously, we expect this number to be negative. Same thing from cash flow from financing activities. We expect this number to also be negative. But let's look down here at the bottom. Free cash flow. That number has been increasing. 1.9 billion. We had a drop off here, but now look, 5.6 billion for free cash flow now. So that number is increasing and it's a positive number. So that's very important. Finviz.com. So what this does, it'll give you ideas of companies that maybe you didn't think of them or maybe you hadn't come across them yet. Finviz will help you with that. So when I first come to this website, now just to let you know, finviz.com is free, just as Yahoo Finance is also free. Okay, but we come here and the first thing I'll do is I'll come here to this screener tab. All right, now as you can see, we've got filters here we can choose from. So as far as market cap goes, I like to start with large. All right, and then country, USA. Here we'll select optionable. All right, and I like to leave everything else relatively open. All right, so now what we can do, we got a lot of companies here, and of course we recognize American Airlines, Airbnb. You know, there's companies here that we recognize, and we have pages of companies to go through down here. But let's narrow it down a bit. So we'll head up here to Signal, and you've got top gainers, top losers, new highs, new lows, most volatile. And then you can even search by trend line resistance, trend line support, double top, double bottom, head and shoulders patterns. And these are things that we talked about in previous modules, different chart patterns that you need to be able to recognize. Ascending triangle, descending triangles. Okay, so I like to go here first to new low. So let's click there and see what comes up. All right, so new low, and let's see if we just put that to any, do we get a few more? Are we? Okay, so sometimes you can just leave this as any to get a few more, and then the market cap is right here. So you don't want anything too low. However, look for names that you might recognize. All right, now Humana, I've heard of Humana, Remark Holdings, okay, VTNR. So these are all companies that have reached new lows. And basically what I do is I look for a company that I might recognize or that I'm interested in, and then I'll do further research. So we got 2 pages down here. What else do we have? Okay, nothing else that stands out in the market cap. Okay, so let's jump. Okay, Petco. Okay, this company is recognizable. All right, so we'll take note of this Petco. And on the first page, I saw, let's try this, no, Humana, how much is? Let's start with this company right here, VTNR, Vertex Energy. It tells you the industry, oil and gas, well, the sector is energy, and then it breaks it down further here, oil and gas, refining and marketing. Okay, let's check out this VTNR. So I'll jump over to Trading View. All right, and let's go here to charts. Okay, so that was VTNR. Vertex Energy. Let's see what's going on with Vertex Energy. So we're on the daily chart here, and we're at a low of $1.35. So we see the price now, the current price. And if we zoom out, we can see this company, they've been as high as $18. And that was back in May of 2022. May, June of 2022, they were up to $18. Okay, 2014, they were up to $11. All right. And this all is before they were actually listed. So we'll start from like right here and go forward. Start from 2012 and go forward. All right, so 18 bucks is like the high for this company, and right now they're down to $1.35. Now we see that down here we have some support, especially right here, and that's at 46 cents. And then we have another possible level of support here, which is at about $1 and let's zoom in a bit closer. This is, so you see we had some touches here of support, but it's above that 200 moving average also. But that's in the neighborhood of 120 per share. So I already have it marked, but you can have an alert set with TradingView. And I'll erase it and show you how to do it. So let's erase this alert. Okay. All right. So when I get a level, I'll right click and I'll choose add an alert on VTNR. And then I want to know when it's crossing down. So make sure you select crossing down in this situation. Crossing down only once, create. Now this dotted line you see here is my alert. So whenever price, we're almost there now, but whenever this price hits that level, it's here right now, but when it comes down to this dotted line, I'll get an alert. So we want to keep an eye on something like this, Vertex Energy. And so we see what's going on with the chart. All right, so we may have some more downward momentum. That's what it looks like. So I wouldn't really want to jump in right now, even though the price is $1.35. However, let's go over to Yahoo Finance. And let's type in VTNR. VTNR. All right. I took a look at this company previously, but I'm going to start from the beginning to show you. All right. So Vertex Energy. Okay. The first thing I'll do is I'll come to profile. And this is going to give me some information about who they are. So you got the address, the website you can go to. If you even want to give them a call, you can go ahead and call and talk to somebody at Vertex Energy and say, hey, what's going on over there? What do y'all have going on? Why should I invest? No. They might hang up on you if you do that. But you can see where they're based. They're based in Texas, right here in Houston. And right below that, it gives you a description of the company. So Vertex Energy, an energy transition company that focuses on the production and distribution of conventional and alternative fuels. It engages in refining and distributing petroleum products comprising the mobile refinery and related operations. This company also sells ferrous and recyclable metal products. Okay, so it gives you an idea of what they do. And from here, we're going to go straight to financials. All right. So as we can see for the income statement, total revenue over the years has been increasing, which is a good sign. We've got the gross profit that has also been increasing over the years, a good sign. All right, let's jump over to the balance sheet and see what's going on there. All right, total assets also increasing over the years. All right, liabilities increasing, oh, that's fine as long as this is increasing also. So if liabilities are increasing, as long as this is also increasing, then there's no problem. Assets need to be increasing as well. Common stock equity also increasing over the years. All right, so this is a company that we may want to put on our watch list. Operating cash flow was once negative, and Well, we had this number, but then it dropped. All right, so that number came down. Let's see these numbers. Free cash flow over the years, it was negative, and then now it's positive. All right, so it's not to say that we want to jump in this company right now and buy up the stocks and or buy up the options, but it's just something that we might want to keep an eye on. And I saw some news, so let's go back to summary. All right. Business Wire, 2 days ago, Vertex Energy provides operational update for the fourth quarter of 2023. Okay. Then you got some more news. 23 days ago, Vertex Energy amends existing term loan agreement. So you can also check out news on these companies. So this is just to give you an idea of what FinViz can do. It can. Now I had no idea of Vertex Energy before today, so it just gives you an idea, and you can add it to your watch list. Okay, so I'll do that here. Plus, I'll go to VTNR, and now I can hit this plus button, and there it is. Now it's on my watch list. Okay, let's jump back over to FinViz and see what else we can find. So we checked out new low. Let's search by let's see, trend line support. Let's see what comes up. All right, so anything that comes up, this FinViz is telling us that it's gonna be or should be at a support level. So let's see if anything jumps out here. Nothing on this page. And nothing on this page jumps out. So let's keep it, well, serious. Okay, well, this is recognizable. All right, let's jump over here. Sirius XM Holdings. Let's just jump over there and see what's going on. So they're supposed to be at support. Okay. Seems like you do have a trend line support going on here. So let's see. If we take this line tool, let me move this up real quick. So let's take this line tool, start from here, and let's go on up. All right, so we've got higher lows and higher highs. Okay, so that's what you want to look for. And they've been as high as what price? Let's see. Back in 2023, they were up to $8. If we zoom out some more, let's really zoom out here. All right, so trend line support. All right, let's go back. All right, back in, whoa, that's a while ago. 2005. Okay, they were up to what? $9. So this could be a company just to watch. You know, maybe you're interested in it, maybe not. But you see, it gave us the signal for trend line support. So FinViz can make it pretty easy for you to find these chart patterns. And now they're at $5.37 per share off this trend line support. So it touched and then it went back up. So, okay, interesting. So this is what you can use FinViz for. You know, you can search by many things: trend line resistance, you know, so many things, double tops, head and shoulders patterns. So I like to come here to get trade ideas. All right. Now, another thing we can use this website for is we can see what's going on behind the scenes. So let's start from the home page again. Let's go here, Insider. Now this page, the green is buying, the red is selling. So what this page does here is it tells you about the insider trading, the people in the company. Are they buying shares or selling shares of the company? And that can be very telling. All right, so I'm doing the same thing here, looking for names that I recognize. And I'm scrolling down. Okay, I've heard of Paysign, but look at this, Meta. We all know Meta. All right, so Meta, we've got, okay, this is the chief legal officer. So it tells you the person's name, their relationship to the company, the date that it happened on, the sale, and we can see the value of the shares right here. All right, now let's go down and scroll further. And I believe I saw Meta here again. I actually did, but let me see. I'm not seeing it low. You know what? Let's go up here. Filter. We can search by buy transactions and sell transactions. Let's go to sell transactions just to filter it out a bit more. Okay, and I believe Meta was up here. Let me scroll down. Okay, Meta. Now this is Mark Zuckerberg. We all know Mark, the CEO of Meta. And if we go to the right, we can see that he unloaded a little over 60,000 shares, and this is the value, okay, of those shares that were sold. Now today is January 25th. This was on January 22nd, 23rd, and 24th. All right, so that's pretty interesting. Look down here, Meta again. All right, this person is the chief operating officer. On the 22nd of January, which is 3 days ago, 9,000 shares. This is the value of those 9,000 shares. All right, so in Meta, now when we see a company multiple times, what we can do is we can click on the company here. And when you click on it, scroll to the very bottom and look at what we have here. Let's get rid of this. Now, this shows you everything going on in that particular company, and we see a lot of information here in the month of January. All right, so like I said, today is January 25th. So just for this month alone, from the 2nd to the 24th, you've got Mark Zuckerberg's name here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 transactions by Mark Zuckerberg, the CEO of Meta. And these are not small transactions. I mean, on the 2nd here, we've got, look at these numbers. Not many shares there, but then on the 5th of January, 19,000 shares. On the 8th of January, 19,000 shares. If we go here, 19,000. So if you were thinking about investing in Meta, maybe right now is not the time to invest. Maybe you want to wait for a pullback. And if we go to Meta's chart, we always want to refer back to the chart. We go to Meta, and let's see what's going on with Meta. So we're on the daily chart, and as we can see, let's zoom out. Okay, so we have a high here. That's in September of 2021. Zoom out some more. And go back. Okay, we're going way back. So as we can see, Meta is what? It's at an all-time high. An all-time high right now. So when you see people selling in the company, it doesn't mean that you shouldn't invest, but it does mean if you were, let's say, thinking about buying calls long-term, maybe now wouldn't be the time. So this is just information. The more information you have before you invest, the better. And since it's at an all-time high, maybe these individuals are just taking profits. Okay, doesn't mean the company's bad, but maybe they're just taking profits. But at an all-time high, you never want to buy at an all-time high. That rhymes. Yeah, but it's true. Never buy at an all-time high. Okay, even buying puts, you know, when you make money as the stock declines, you want to wait for that as well, because I wouldn't buy puts right now. Wait for some confirmation that it's going back to the downside before you buy puts. But I definitely wouldn't buy calls right now. So you can use FinViz to find this information out, and it's pretty valuable information. All right, so let's jump back.
All right. So on this page, everything's kind of mixed up on the sell side of things. Now let's check out the buy transactions. So now we've separated everything by the buys. Now this company, Paysign, I've seen before. Okay, Top Line Capital Partners, 10% owner. So they've put in 1, 2, 3, 4, 5 orders, all within the last 2 days. The last 2 days. 52,000 shares, 200,000 shares, 42,000, 52,000, and 204,000, and another 42,000. Okay, so when you see buys, you definitely want to be on the lookout. Let's jump over to Paysign on Yahoo Finance first. That was Paysign Inc. All right. Let's see what's going on. Okay, so the share price now is $2.86. Let's jump over here to profile. Let's see what they do. Okay. Paysign Inc. provides prepaid card products and processing services under the Paysign brand for corporate, consumer, and government applications. Okay, so they offer transaction processing, cardholder enrollment, value loading, cardholder account management, reporting. Okay, so a card processing platform. They develop prepaid card programs for corporate incentive rewards. Okay, so we can get an idea of what they do here. And then next, where we're going, to the financials. See what's going on with the books. Okay. Well, total revenue is actually increasing. Profit increasing over the years. Let's jump over to the balance sheet. Total assets increasing. Okay. Common stock equity increasing over the years. Let's go to cash flow. Okay, now these numbers here, operating cash flow, that has gone down. All right, and then the free cash flow is negative. All right, so something we can watch. Now let's hit the charts though and see what's going on. Paysign. All right, so we can see they've spiked up from the $1.70 level. So we can just keep an eye on this and we can add it to our watch list. Paysign. So, FinViz is pretty cool to be able to find out what's going on in the company, and you can go to the screener and kind of do some more digging. So that is why I like FinViz, and again, it's free, so just check it out and see what you think.
The earnings report. This is a quarterly report released by a company with information on their recent financial performance. The earnings report is a very important day for a company, and if you're invested into this company, it's a very important day for you too. For example, let's say you have Tesla call option contracts with a 10-month expiration date. You may not have to watch Tesla each day, however, you need to be aware of the days, 4 days per year, when their earnings report is released. Now, why? Well, because a stock's price can make a huge move during an earnings report to the upside or downside. So let's say prior to the earnings report, you're up 60% on your Tesla call option contracts. Now, if you're up 60% and then let's say tomorrow is the earnings report, you may want to consider taking your profits because that report could come out and Tesla's stock could drop. But it could also go up. But if you're not even aware of when the earnings report comes out, you may be missing out and you could take a loss. You just never know what's going to happen with that report when it comes out. So I would just say when you have long-term option contracts, you need to be aware of when these earnings reports come out for the company that you're invested in. So I would just recommend that because the stock can make a considerable move when these reports are released. Okay. Now I have a video coming up for you next, and afterwards I'll be right back. So here is the chart for Tesla. So currently we are in January of 2024. And as I said, the earnings reports, they come out quarterly. So that's 4 times per year. And on TradingView, if you look down here at the bottom, you got 1 green E, 2, 3, 4 E's. This is for 2023. All right, so if you look down here, we have January of 2023. The first report came out. The second one came out in April of 2023. The third one came out here in July of 2023. And the fourth one came out in October of 2023. 4 earnings reports for Tesla. All right, this is the daily chart. Each candle you see represents 1 day. Now take a look at this. So this is the first report that came out in 2023. On this day, if we go up, that's this candle right here. Let me zoom in so you can see that a little bit better. Let's move this up away from the volume. All right. This is the first, this right here, this candle. Now take your eyes to the right. You see 143.17. And actually, let's look up here. All right, so this O stands for the opening price of that day. The H stands for the high, the highest the price got in that day. The L is the low, the lowest price that it got to on a particular day. And this C is for the closing price for that particular day. Opening, high, low, and closing price. Come back down here to this candle. You see how that information changes when I go from one candle to the next? See up there? Now we're on the earnings day candle. Now what do you see up there for opening? 141.91. The high was 146.41. The low was 138.07. And the close was 144.43 on January 25th. Now the earnings report came out the very next day, which is this candle here. The high, well, let's start with the opening. The opening was 159.97. The high was 161.42. The low was 154.76, and the close was 160.27. Just overnight, in one day, Tesla jumped up about $20. The high was 161 on this day after earnings, and then on the day of the report, the low was 138.07. Okay, so that's a significant jump, almost $30. And the earnings reports, they will be released either before the market opens or after the market closes. They never release earnings reports during market hours. Never. So if you have, let's say, the call option contracts for Tesla, and you're in these contracts and the market closes, and they are going to release the report after the market closes, guess what? It's too late. You can't sell. If you decide, oh, I want to sell these contracts and the market is closed, it's too late. So be aware of the report, and if it comes out before the market opens or after the market closes. This information is very easy to find out. You can Google it, and you can just very easy to find out that information. So just be aware of it. So that's the first report. Tesla jumped up $20-something. So if you had call option contracts, you would have saw
your account the next morning, a nice increase in your position. Now let's go to the second report, which is this one here, April 19th. That's this candle. Take your eyes up there at the top and you'll see the O, the opening, 179.10. The high of the day was 183.50. The low was 177.65. The close was 180.59. That's on April 19th. The next day after the earnings report, which is this candle here, the opening was 166.17. High was 169.70, low was 160.56, and the close was 162.99. So Tesla dropped down about another. The high was what? 183.50, and the low the next day was 162.99. So we're talking about another $20, but this time it dropped $20. So if you would have had call option contracts, guess what? The next day, you would have been down just overnight with a $20 decrease in the stock's price. So your option contract would have been significantly impacted in a negative way. All right. And we never know how these reports are going to go. So even though you might be long term with a 10-month option contract, you may want to take profits and then jump back in later. Or maybe you want to stay in, who knows? Now, as we can see, if we follow price action, Tesla came down, but then over the next month or two, it went up. So you could have held your call option contracts, lost money, still held those same contracts, but over the course of a month or two, you would have recovered and been up. So I'm not telling you to sell. I'm just telling you to be aware so you can make a choice. So you need to just be aware. That's all I'm saying. And let's go to the third report that came out 2023. This was July 19th. And we're up here at this candle. So Tesla was up here. The high was 299.29. The very next day, the low was 261.20. So that's a pretty significant drop from almost $300 to a low of $261. That's a $40 drop. So, it's just, you need to be aware. You need to really be aware of these reports, okay? And then, if you have to mark it down, set an alert on your phone, just be aware of it because things can happen really quick overnight when these reports come out. Even though you're long on your position, just be aware.
All right, so this is Earnings Whispers, and I recommend that if you're on Instagram, you can follow their page right here, EPS Whispers, and they always put out these screenshots of upcoming earnings reports. So here, for the week beginning January 22nd, 2024, the most anticipated earnings releases. They have each day, Monday, Tuesday, Wednesday, Thursday, and Friday. And they have the companies listed. But as you see below each day of the week, you have before open and after close. All right, so in this example, let's look at Tesla. Tesla, their report is set to be released on Wednesday after the market closes. Okay, so we can see that Tesla's earnings report came out on Wednesday after the market closed. So if you wanted to sell your option contracts, you would have needed to do so before 4 p.m. Eastern Standard Time on Wednesday, on this day, if you wanted to sell. All right, so again, this page is a really good Instagram page to follow to keep up with the earnings reports. But like I said, for any company that you're invested in, all you have to do is go to Google and let's say Apple. You can type in Apple's earnings report and it'll give you the date that it'll be released. So it's pretty easy to get that information. Okay, now let's talk about a play that I took personally in 2023 with NVIDIA. So what happened? Well, okay, I bought 4 option contracts the same day that the report was set to come out. So we're on Wednesday again, and you see NVIDIA, I have circled, their report is set to be, or was set to be released after the market closed on Wednesday. After the market closes. So I bought the contracts that same day before the market closed on Wednesday. And when I bought those contracts, it was a 2-day expiration on them. So the 2 contracts were going to expire Friday. So I bought them on Wednesday. They were set to expire on Friday. So I bought these 4 contracts, and I say high risk play because anytime you buy right before a report is released, it's we never know what's going to happen with these reports. So I always tell people, if you're going to do that, whatever amount of money you place on those contracts, you should be okay with losing if the report doesn't go in your favor. So that I say that, let me say it again. If you want to buy contracts right before a report is released, just be okay if that play doesn't go in your favor. So if you put $5,000 on it, you need to be okay with losing most of, if not all of that money, because again, we don't know what's going to happen with these earnings reports. So I chose to take a $5,700 investment on 4 NVIDIA calls. So you see I have right here, this was a very risky investment because I could have lost the entire investment, which was this $5,700, right? So I got 4 NVIDIA calls for $5,737.64 to be exact. Now, again, the report came out after the market closed on that Wednesday. So NVIDIA just happened to shoot up $70. So I think it was at around $300. And then when the report came out, it went to like $375 or $380 just overnight. So that $5,700 investment ended up being $33,000, and that was a profit of $27,329.44. But NVIDIA jumped up big time. So you can see right here, I did a screenshot. So on the 24th of May, that was this Wednesday, I bought 1 NVIDIA contract. It was a $300 call at $12.20. So I bought 1 contract, and again, it was $12.20. So you multiply $12.20 times 100. That's how you get this number. And then I bought 3 contracts, and I bought the 297.50 call at $15.05. So that's times 3, and that's how you get this number. So this was my total investment on these 4 contracts. But when I sold the very next day, these were the numbers that I sold at. So you can see this same 1 contract went from $12.20, and then it was worth $81.70. And then these 3 contracts went from $15.05 to $83. So I sold at that price. That's why I made so much money. But it just happened to work out like that. A lot of times the stock is not going to move $70. There's a few companies out there that can be very volatile with earnings report. Most companies don't move $70 though. So that was a play I took. But again, if you do an earnings report play, meaning again you buy the contracts right before the report is set to be released. Matter of fact, today's Wednesday. NVIDIA, they've got earnings coming out today, as a matter of fact. Now, I'm not in the play right now, but I think, today after the market closes, Nvidia is set to do their earnings report. So you got some people like, and this is a really good example. So today they are set to release the report. Now, if I were to jump in and buy a few calls today, and this same thing happened, I would, well, hopefully it would go in my favor. But this is what I did. I bought on the same day the report was set to be released. So, but yeah, they have the report coming out today actually. But yeah, this play happened to work out for me. But again, if you do this, just be okay with losing. If you lose, just be okay with it. All right, got a video coming up for you, and I'll be right back afterwards.
Okay, so let's talk about that Nvidia play. So each candle is representing one day. This is the daily chart. And right here is the big jump up that I was able to take advantage of. So let's go down here to the bottom. You see the E. This is the day of earnings on the 24th of May, 2023. And that's this candle right here. All right, let's go up here to the top. All right, so if we go back to this candle, at the top there, you see the O is at 302.10, the high 306.07, the low 298.06, and the close is 305.38. All right, so that's the price action for this day. Now the earnings report was set to be released after the close on this day. So I bought like that afternoon, and I bought those 4 Nvidia calls, and I paid, just under $6,000 for it. And then the next day, let's go up, and you can see that Nvidia jumped up 90 something dollars. So look up there at the top again. The O is now at 385.23. The H is at 394.80. The low, the L, is at 366.35, and the C, the close, is at 379.80. So that was a huge spike up in price just overnight, and that's why I was able to make so much money on that play. So again, this is not something that I advocate for people to do, especially if you can't afford to lose that entire investment. So you don't want to risk your entire account or half of your account on an earnings play, especially it's an earnings play when the expiration is really close. Now, let's say I would have bought those same 4 option contracts and the expiration was 5 months out. Well, then even if it had went down, I would have had some time to recover for it to come back to the upside. But when I bought on this day, the 24th, the expiration date was that Friday, 2 days away. And that's on this candle, this day. So, if the play would have went in the other direction to the downside, and especially if it would have dropped $90, there's no way I would have had time to recover for price to come back up. And, by me being able to buy those 4 contracts for just under $6,000, it was that price because the expiration date was so close. So if it would have been a 4-month or 5-month expiration, those contracts would have cost me a lot more money, way more than $5,700, way more. So it was a gamble, it was a dice roll, and it just happened to work out in my favor. So I just wanted to highlight that play. And again, this is risky, especially when you have a very, very close expiration. So I just kind of rolled the dice that day, but I wanted to talk about that Nvidia play. And if we fast forward to Nvidia, look where it's at now, over $600. So when I talk about going long, again, this was back in May of 2023. So let's just say, and it would have cost a good amount of money, but if you had that money to invest and you would have bought, let's say a 8-month option contract. So that would have taken you from May, then you got June, July, August, September, October, November, December, January. We're in January right now. That's 7 months. So if you would have held that, your option contract would have been worth a lot, because this is like what, at the $300 level back in May of 2023, and fast forward to now, January of 2024, the price has more than doubled. So you can imagine how much money you would have been able to earn in just that 7-month period. So you would have been going through all of this price action. Up, down, up, down, up, down, and then ultimately up. Okay, so that can be the power of holding long term. The price is gonna fluctuate, but once you get a run up, you can really make some money. Or if you have puts, if you get a run down, you'll make money. But this just is a really good example of long-term investing. This right here, what I did, was just a 2-day deal, and it was a dice roll. But this right here can really show you the power of holding long, okay, when price goes in your favor. So just wanted to highlight that for you.
So let's go into price to earnings ratio, the PE ratio. This determines whether a stock's price is overvalued or undervalued. It can also be used in determining future earnings growth. The PE ratio is how much you are paying for $1 of the company's profit. It is the earnings per share is the amount of a company's profit allocated to each outstanding share of its common stock. It's the portion of a company's net income that would be earned per share if all profits were paid out to its shareholders. A company's PE ratio should be compared to other PE ratios across the same industry or sector. A good PE ratio is between 20 and 25. The lower, the better. So it would be the share price divided by the earnings per share. And that will equal your PE ratio. All right. So back to Yahoo Finance. We have the Coca-Cola Company. And we see that we have a share price here of $59.16. And the PE ratio is 23.95. So this is the PE ratio, but the share price is $59.16. All right. Debt to equity ratio. The debt to equity ratio highlights, let me jump back to that slide real quick here. So basically, your EPS. Let me just jump back here real quick. The Coca-Cola Company, you have the price per share is $59.16. This arrow is pointing to the EPS, the earnings per share. So that is 59.16 divided by this number here, and you arrive at that PE ratio number here. All right, so I just sorry about that. Skip over that real quick. So she has 59.16 divided by this right here. The EPS is 2.47. Then you arrive at the 23.95 number. So again, we want that number to be between 20 and 25, but the lower, the better. All right, so debt to equity ratio, the DE ratio, highlights a company's dependence on borrowed funds and its ability to meet those financial obligations. A high DE ratio means more risk and that the company is financing their growth with debt. A company's DE ratio should be compared to other DE ratios across the same industry or sector. We don't want that number to be higher than 2. So that's your total debt divided by your common shareholder equity. And then you get your DE ratio. All right, back to the Coca-Cola Company. All right, so we have the numbers here. All right, we have 66 billion. All right, 24 billion, So we take the numbers and we drop the zeros off. So we don't need the zeros. So we take these numbers and we divide them and we get 2.77. The PB ratio is a metric widely used by investors to find undervalued companies. A company's PB ratio should be compared to other PB ratios across the same industry or sector. PB ratios under 1 are typically considered solid investments by investors. So you take your total assets minus your total liabilities, that will give you the book value. Book value divided by outstanding shares will give you the book value per share, or BVPS. Share price divided by book value per share gives you the price to book ratio. All right. Now, Coca-Cola Company, you have your total assets here and total liabilities here. Now we drop the zeros. Don't need those zeros. So here are your numbers, subtraction, and then we get this number here, the book value. Okay, the book value here. So let's go to the next page. This same number, the book value, now we divide it by the outstanding shares. That's found right down here. Once you click on statistics, you come down here and you get shares outstanding, 4.32. So you divide those numbers here, and it will give you 5.98. So you take the per share price and divide that by the 5.98, and that number will be your price to book ratio number. Okay, so that concludes the long-term investing 2.0 module.